They have one. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 8th of July, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the second week of July. And looking across these two pairs, the precious metal is still stuck within the range, bounded by 1900 from below, and could not break out higher above this resistance zone around the 1935-37 level. And whereas dollar yen has finally continued to retrace further after such an extended move higher, and especially after hitting the key round figure at 145. So let's that was also partly driven by the non-farm payroll report on the Friday, which came out lower than expected, and the market took advantage, although spot gold could not break out higher. All right, let's take a look at what the major drivers were last week, and then look ahead for this week's fundamental news. Last week was mainly two central banks. One was a rate decision from the RBA and the meeting minutes coming up from the FOMC. And apart from that, there was the key news from the US with the non-farm payroll report. But to start off, the ISM figures for the US for manufacturing and services. Manufacturing has been contracting over the past 8 months, so it's no surprise that it's still not gaining any traction here. Whereas services has been really fueling the economy, and came out stronger than expected as well. And on Tuesday, the RBA rate decision was no hike as expected, but indicated there could be further hikes in future months, could be in September. And meeting minutes from the FOMC for last month's meeting was basically almost all the members were voting to hike at a later stage, even after this pause. So it's that's why it's a hawkish pause or skip. So that instilled further fears in the market, and US dollar managed to recover somewhat from that. And on Thursday was a surprise as the private sector reported a strong jobs added with almost more than double the forecast figures. So that initially drove the US dollar up and the majors down, but they managed to recover after that. And from that, with the lower than expected jobs added for Friday from the NFP, which was lower than expected, and that markets took advantage and drove all the majors higher and to recover after initially dipping lower in the from the first half of the week. Now, moving ahead to this coming week, we have CPI and PPI data from the US. And CPI forecast is dipping lower, projecting an even lower year-on-year figure. The last figure was in June with 4.9%. sorry, it was it's a typo here. It's 4.0%, and it has been dipping lower since a year ago, from July last year, from the 9%, 9.1%, and has been trending lower. So the market is forecasting even lower levels. So we'll see whether that's will be the case, and follow that up with PPI, which has been also dipping lower. And from the UK, there's jobs data as well as their GDP figure. So we'll see whether their GDP is able to stay above the zero level. Okay, let's watch out for this coming week news with CPI especially. That's the key one from the US. And with some consumer sentiment figures at the end of the week. Let's move back to the analysis. Let's begin with spot gold. And after initially climbing up to test the 1935 resistance zone, was rejected on a Wednesday and then continued lower on Thursday, but managed to swing back up because of the better than expected ADP figures, and then finally on Friday with lower than expected non-farm payroll jobs added. So back up to test the swing high, but still unable to break through this resistance zone. Support is still key at the 162 FIB extension, just around the 1900 round figure, and daily 200 below that as well. Another zone of resistance at 1950, where it has not been able to test for a few weeks already. Been dipping lower down to 1945. So it still needs to attempt to break through this resistance layer to squeeze out another 100 pips to get to 1945, and then trying to break the 1950, or at least test the 1950 round figure. But otherwise, it's still trapped within this zone, but looking more slightly bullish as a higher low is formed. And now could be a descending triangle, or sorry, an ascending triangle. So it could break out either way. It's could break out higher, or it could also still break down lower. So the news will be CPI this Wednesday, and if the CPI figure keeps dipping lower, which has been trending lower for months now, there's a possibility that gold could take advantage. Let's take a look on the weekly time frame. And yeah, two dojis, almost dojis, small spinning tops, and with rising lows. On a monthly time frame, it's the start of the month, and it's struggling to recover back above the monthly 200. No, sorry, that's the previous resistance, and it needs to climb back up and make its way back up to the 1950. That's the next critical resistance. So let's add a rising trend line here. And along with the resistance zone that's forming the ascending triangle. Well above that, that's another key resistance at 1975. And we can also extend this previous upper trend line of the symmetrical triangle, and that could also be forming resistance, aligning with the daily 55 EMA and consolidating into tight, narrow apex here. Okay, so getting closer into potential breakout or breakdown sometime soon, either this week or the next, as we approach the next FOMC meeting towards the last week of the month. But for now, it's still struggling down at the 138 FIB extension, along with the 162 FIB extension. So within the lower range here. Right, so let's compare this with the US dollar index, the DXY. And here's the DXY, US dollar index, where on Friday with the non-farm payroll report, it has fallen lower right into the support at the 62 FIB retracement, just below 102. And after failing to break out higher above the highs of previous week and could not test the daily 200 EMA, so still constrained under the 103 level. And now it's coming up to the critical support zone. If it does break down lower, then watch out for these previous months low. And then the 786 FIB retracement level. Try to gain some support. Let's take a look on the weekly time frame. And yes, it was rejected at the weekly 55 EMA and strong bearish move down. So sitting right at the 62 FIB retracement, and there is this additional support level. Is breaking below the consolidation triangle, this symmetrical triangle on the daily time frame. And let's see if we take this swing move here. So the support level is at 101.47. It's going to be a critical support zone. And let's move this over to the 50 fib is now the resistance zone. And it needs to climb back up above the 103 in order to recover. So let's add this as a support level here. Okay. So if it does break down lower, there is still another critical support at the 78.6 big retracement. So we'll see whether it's going to dip down that far. There could be a reaction at the beginning of the week to retest this trend line break and to confirm that it's a bearish breakdown, and whether it's going to bounce off this support, previous month's low, or it's going to go deeper. Okay. Let's also take a quick look on the monthly time frame. And we'll see if there's how much bearish momentum there is. Similar to the euro, there's a large bullish candle in this case for the month of May, that it could be operating within that range. So it may not, it still has a strong support from that previous month in May, all the way down to the 101. All right, so we'll see whether the CPI and PPI figures will reverse the situation or provide more data to drive the US dollar lower, especially if the CPI comes down lower than expected. Okay, let's move back to the other major pairs. Let's move on to dollar against Japanese yen. It is made a major retracement lower on the Friday with the non-farm payroll data, and it was due for retracement anyway after such an extended move right into the support zone at 142. Now we could also draw a fib retracement from this recent swing low to swing high, and it's approaching the 50 fib retracement at 141.75, and there's alignment with the this swing high at the 100 fib with the 62 fib retracement at 140.97. So that's likely a potential support level. However, if it does dip lower, there's the next key support at 140, just around the 78.6 retracement as well. So let's Keep this here at 142 and the 50 fib. Next major support zone at the 62 fib and this swing high. Resistance, we can lower that now to the 145 level. And possibly another key support at the 140. Let's take a look at the weekly time frame. And that's the bearish engulfing here. And there could be some follow through in the bearish momentum. And on the monthly time frame, this is the first week of the month, and it's yeah, quite normal that there's profit taking from the 145 and pulling back after 3 bullish weeks and 4 out of 5 bullish weeks. Okay. So critical week for US news with the CPI, and that's going to lead up to the Federal Reserve's decision towards the end of the month. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.